start now. A small recap of what we did yesterday. The topics that we covered was why choose the stock market, what was the stock market. Okay, can somebody tell me what is a share? What does a share mean? Sorry? It is a policy. Okay, it indicates ownership. Next, what are other features?
How much my vote will count in that if like
Company's decisions. Okay. What else? Anything else you want to talk about? Okay. Then what was the stock market? It was a marketplace where shares are traded. Okay. So what are the important layers in a stock market? What was the stock exchanges? Name the two stock exchanges. NSE and BSE. NSE is National Security Exchange. BSE is Bombay Stock Exchange. Okay. So we talked about clearing corporation, not necessary. Then we spoke about SEBI. What is SEBI? Regulatory body. It stands for Securities and Exchanges Board of India. So it was the regulatory body. And what else did we talk about?
Depositories.
Depositories. What was a depository? Record keeping, okay. Two depositories that we have. NSDL, CSL. Then what else the other thing that we spoke about? Brokers. Full time and discount. Okay. Now what are the three accounts that you require for trading? And Demat. Okay. So you know how to open a bank account. How many of you have a bank account? Everybody has. Okay. To open a Demat account, you don't need to do anything separately. Once you open a trading account, the same broker will open a Demat account in your bank. Okay. So it's a two-in-one process. And the prerequisites for opening a Demat account. Okay. So first is a PAN card. I suppose most of you have it. PAN card. Then you need an address proof. This can be a Aadhaar or a bank passbook's first page. Then you need to link a bank account with the trading account. You need to give your bank account details. This can be in the form of a cancelled check or a 6 months bank statement, anything works. And you will need a passport size photograph if you do the offline process. If you go for the online process, you don't need this also. These three are enough. They will just ask for one selfie of yours to verify it is you who is opening the account in your name. Other than that, it is just a 5 minutes process. So it will take only 5-minute process to open a Demat account with any of the brokers. You don't need to spend hours together filling forms. It's a very quick process. After this, you will have your trading account ready, as well as the Demat account. Now, you want to open a trading account with another broker, you can do the same process. You don't need to provide any NOCs or something. And the important part of this is you need to provide something called as a POA. Anybody knows what is a POA? So it's called it's a document which states the power of authority. Anybody knows what this is or why they use this? Okay, it basically gives the power to take legal decisions on your behalf. Okay, it gives a power to a third party to take legal decisions on your behalf. Okay, this is the power of attorney. The power of attorney is useful in many cases. Suppose you are in USA, you have a land here, you want to sell the land to somebody. You can't come here to sign the documents, or you can't send the documents and get it signed and then return it back. So you can give a power of attorney to your father or anybody in that matter who is in India and ask them to sell it in the now. Okay, so this is how the power of attorney works. Why we need the power of attorney is brokers are third parties. Okay, so once you buy a share, there is no requirement for this. The broker can buy on your behalf. But when he has to sell the shares, especially shares that are restricted, there are a few called restricted shares. Okay. Based on the activity of those shareholders, some shares will be tagged as restricted. Restricted doesn't mean that you have you don't have full access to it or something like that. Okay. It just means that for selling these restricted shares from your demat account, you need to do a two-factor authentication. Okay. So for this simple procedure is you will get an OTP in your registered mobile number that you have to enter while selling. Normally for other shares, you click the sell button, it will ask for one confirmation. Do you really want to sell this share? If you click yes, it will sell automatically. Okay. For restricted shares, you need to provide this OTP. If you don't want to have this hassle of providing OTPs, if you give them the POA, you don't need to provide OTPs, they can sell directly, just like any other share. Okay. So there will be an option in the broker. Do you want to enable POA? If yes, you need to sign one form. Digital sign is enough. So the digital sign is basically your sign from Aadhaar will be copied using an OTP. If you give that, you don't need to keep entering OTPs every now and then. Okay. So this is one thing that you can enable. There is no security issue with this. There is no any other issues with this. So this is one good thing that you can enable. So what else did we speak about? Yeah, times of market. So what time does the market start in India?
9:75.
So what time does the market start in India? 9:15. Okay. So 9:15 to 3:30 is the market in India, and the rest you know. So there is no need to discuss much. Post market session, I told you the usage. In short sets, when you forget to do the buy trade, the broker can do it on your behalf after 3:30 also when the market closes. And coming to international markets, you don't need to remember everything. You just remember European markets, because European markets are the only markets that open or close. Then our markets are running. Okay. So most of the US markets and all are extremely apart from our time. Our markets don't run at that time. So there is not much fluctuation. So you don't need to look much at US markets. Just European markets are enough. Max to max, Japan closing time will correlate with our first 2 hours of trading. So only those two you will just remember. Other than that, nothing much required. Then coming to price determinants, we saw supply demand is the most important part. Other than that, you have these other things, government policy, wars, natural disasters, regulations, deregulations, etc. Then coming to the next concept of settlement. Okay. So does anybody understand something by the word settlement? Anybody? Okay. Settlement is basically when you place a trade, the brokers need to deliver the shares to your demat account. When you place a buy order, when you place a sell order, they need to settle the money in your account. So this is what we call settlement, delivering the shares or money to the respective people. If you buy, you get the shares. If you sell, you get the money. When you are buying, someone else is selling. What someone else sells only you can buy. Okay. So if you are buying, shares are sent to you, your money is sent to them. This delivery process is called settlement. Okay. This settlement, initially it was T plus 30 days. T meaning it was the trade day. Okay. So T is the day when you place the trade. After that 30 days, they had the time to settle the shares. So you place a buy order in your demat account. It would reflect only after 30 days, not necessarily only 30 days. It would be settled in 27 days also, but the upper limit is 30 days. Okay. So this was there before. Now it is reduced to T plus 2. You place a buy order today, in 2 business days, 2 working days, the share will be settled in your demat account. Okay. Same way when you sell the shares, your money will be settled in your trading account in 2 business days. So T is the day of the trade. The next day there is apparently nothing happening, but there is one concept called BTST. I'll come to that. So the third day, which is the T plus second day, you will have all the money and shares debited or credited in respective accounts. Based on this, you have this short sell. Limit is same day. That is on T day itself you need to settle it. Okay, that is only concept applied there. Other than that, now actually SEBI is planning to go for T plus 1 day. 2 business days is a lot of time for many people. Many people are looking at buying and selling the next day itself. Okay. So SEBI is looking at something called T plus 1. It may be possible in the next 2 or 3 months, not sure. We'll see what happens. Now coming to BTST. BTST is short form for buy today, sell tomorrow. So you buy today, the shares take 2 business days to settle. So if you buy today, tomorrow and day after, the shares won't be available in your demat account. So within these 2 days, if you sell the share, it will be considered as a short selling because you still don't have the shares in your possession. Okay. So if you sell it in this 2 days, it will be considered a short sell because the shares are not yet in your demat account. So you need to wait for T plus 2 days to make a safe trade. Okay. If at all you buy a share today for 1,000 rupees, tomorrow it goes up to 1,500, and you are very sure that the day after tomorrow, that is the second day, it will come down to 900, and you want to execute the trade here, sell trade, you want to do it here. Okay. So you can do it, but it will be considered as a BTSC order, and you have to take the precautions that you take for a short sale. That's it. Okay. And same in restricted shares, BTST will not be allowed. Okay. Then coming to vocabulary. Okay. See, there are so many terms. These are very less. There are many more terms being used in the market. But these are the most common used, and these are the most important ones. Okay. So we look at it one by one. You know what's a trend? What's a trend, everybody? Whatever happens collectively, it's called a trend. You do the trend on Instagram, it's an Instagram trend. If you do it in the market, it's a market trend. Okay. So it is basically how the market performs, whether it's going up, going down, or going sideways. There are 3 choices for the market. It can go up, it can go down, or it can remain the same price. Okay. So based on the trend, we can name this as an uptrend, a downtrend, or a sideways trend. Okay. So this uptrend is also called a bull trend. The downtrend is also called a bear trend. Okay, we'll continue. The bull trend. Why is it called a bull? Have you ever seen a bull attack somebody with his horns? It pushes the man up. It pushes the enemy upwards. So that is why a bull trend is a synonym for uptrend. When a bear attacks, it hits the person with its paws down. It makes the man hit the floor. So that is what happens in a bearish market. That is, the trend goes into a downward trend. Okay. So then next term will be script. Okay. Script is nothing but a short form for a stock name. Okay. Let us say Tata Consultancy Services. Its script will be TCS. Okay. Same way, you have something called Akshay Optical Fiber. This is a company. They trade in optical fibers. They are listed on the stock market, and their script will be this. This will be their script. Okay. So you can search for the company name, that will also be displayed. You can search for the script name, anything is displayed. You just need to remember this is called a script. Okay. So now we have something called as the face value. You would have learned it in numerals in first and second standard, but that was shit concept. Now this concept is actually interesting. Face value of a 500 rupee note is 500 rupees. Okay, meaning if you give a 500 rupee note to somebody, it is worth 500. You can buy anything worth 500. Okay, exactly same way. Face value of a 10 rupee note will be 10 rupees. Okay, now this share has got two prices. Share has two prices. One is the face value, the other is the share price. Okay. Now the face value is what was the value of the share initially when it first was framed. Okay. When Prithvi and Co had decided to go public. Going public meaning it was converted from a private company to a public company. When it converts to a public company, it means the shares are traded in the open market. Okay. So it is issuing a part of its shares to the open market so that public can trade. So it is going from private to public. Prithvi and Co going public. That is when you decide the face value of the shares. You can decide. If it's your company, you can decide. You have the will. Okay. So you can set it at 1 rupee. You can set it at 5, 10, 20, 50, 100, anything. Any amount you can set it up. It's the face value. Okay. So if you have 1 lakh shares that you want to put it in the open market at a face value of 5 rupees, okay, you don't need to necessarily sell it only for 5 lakh capital. This is nothing but, this face value is nothing but what is the price on the share in papers. It is not corresponding to the share price today. So TCS face value was 10 rupees. Now it is being traded somewhere around 1,200. Okay, so this is the share price, this is the face value. Face value is of no use in a day-to-day situation. It is only useful when you look at corporate actions. Okay, when we look at corporate actions, you will understand about face value more clearly. I think most of you have not understood about it. So when we look at corporate actions, I will explain what is face value again. At that time, you will be able to better understand it. So now TCS face value was 10 rupees. Even today, the face value is 10 rupees. But its share price is 1,000 rupees. Okay? So you remember this much for now. Now looking at position. A position can be used as a noun or a verb. Okay? Position is the trade that you take. That is called a position. If you want to buy TCS today at 1,200 and the trade is executed, so your position will be bought TCS at 1,200. This will be a position. Okay. It is nothing but the trade that has been executed. That's called a position. And the verb is to place a position. To take a trade is called a position. Okay, taking a position. So if you take a buy position of Wipro, it means you are buying the shares of Wipro. If you take a sell position of Wipro, it means you are selling the shares of Wipro. Okay. Now in positions you have two types. One was the buy, the other was the sell. This is also called going long. This is also called going short. This is nothing but short selling. Its short form is short. Shorting that share means you sell first, buy later. Everybody understood the concept of short sell now. So shorting is you sell first, buy later. That is short position. Long position meaning you buy first, sell later. It doesn't have to do with anything about the duration. Nothing to do with duration. It doesn't mean you're a long-term trader, short-term trader, nothing. Taking a short position is short sell. Taking a long position is a buy trade. Okay. We looked at order and trade yesterday. Can anybody tell the difference between order and trade?
Order is open transactions and trade is fulfilled.
Right. Okay. Order are open transactions. Trade are fulfilled transactions. Okay. So order, you place it for one day. Now we look at the types of order later. So order, trade, then there is a term called square off. Okay, square off. But before that, we look at what is a holding. As I said, what is a position? It is the trade that has been executed. Okay, so a holding is nothing but an open position. Open position in the sense that, let us say you bought Wipro shares today, 5 shares of Wipro at 1000 rupees. Okay, so your position is you are going long on Wipro, you are buying 5 shares at 1000 rupees. So your capital will be 5000 rupees. Now the holding, you have not sold Wipro. Your holding will contain Wipro because you have not yet closed the buy position. You are going to close the buy position. So your holding will have Wipro. Now let us take the example with 2 shares. Wipro, TCS. Wipro you have bought 5 at 1000 rupees each. TCS you have bought 10 at 1200 each. Let us say after a few days you have sold TCS all 10 shares at, let us say, 1500. So now your holdings will contain only Wipro 5 shares. This is a closed position. You have bought 10 shares and sold 10 shares. So this will be a closed position. Now instead of 10 shares, let us say this was also 5 shares. Okay. So your holdings will contain 5 shares of Wipro and 5 shares of TCS. Understood? So your holdings are open positions. 5 closed positions you did, 5 shares are in open position. So those 5 stay in your holdings. Okay. The act of closing a position is called square off. The act of closing a position is called square off. It means, let us say you have done a buy trade of, let us say, TCS, buy trade of TCS, 5 shares, no matter, doesn't matter what price, buy trade of TCS, 5 shares. Now you need to sell this, that is called square off. Now imagine you do a short sell, you sell TCS, 5 shares. Now what will be a square off order? It will be a buy order. Understood what is square off? It just means closing a position. So initially you had a buy position, you closed it by selling it. So that was squaring off. If you had a sell position, square off means you need to buy the shares. Okay. Understood square off now? Anybody has any doubt?
So square of buy will be useful in short sale.
Square off generally means both buy and sell. You are doing the opposite of what you had done earlier. That's it. Understood? Square off, long, short, all these are day-to-day terms in the stock market. So if you understand them well, you'll be able to communicate easily with your fellow traders. Communication is very important in the stock market because without information or analysis or inside information, it is quite risky to trade in the market. Okay, now we saw something called a share price. Okay, but this share price is a dynamic price. It doesn't stay still any time. Okay, so let us say TCS was at 1200. After a few minutes, let us say they have announced a new CEO is going to take over. It might go to 1500. Same day, there is a bad news that TCS has been looted or something. Some office has gone fire. It will fall down to 1000 rupees. Let us say some office of this went into fire, so 1000 rupees. So it keeps changing. Okay. So share price is not fixed. It's a dynamic price. It also has 2 synonyms. One is CMP, the other is HPP. Okay. CMP means current market price. Okay, current market price. At this moment, currently, whatever the share is being traded in the market, whatever price it is being traded in the market, that will be called the current market price. That is also the share price. Okay, it is also called the latest price. Latest traded price, LTP or CMP. All are same. Okay, now we looked at current market price and LTP, and there is some concept called as OHLC. Okay, this is also got to do with prices of the share. So O stands for open, H stands for high, L stands for low, C stands for close. Okay. So basically, what it means is, in a certain period of time, it can be any period of time. Let us say this period of time is 1 day. Okay. So today's opening price, that is at 9:15. Whatever the price was at 9:15 will be considered the open price. Market, when it opens, whatever price a certain share has, that will be its open price. Okay. So in this period of time, that is in today itself, whatever was the highest price it touched, that will be the high. Okay. It is generally used as high. They don't tell it as high price or highest price. High. The high of a share was 1,280, meaning that is the maximum price that it has gone to today. Okay. So similarly, in this certain period of time, whatever was the lowest price, and closing will be at the closure of the day. That is when the market closes at 3:30 p.m. That will be the closing price. Okay. So open, high, low, and close. Now, instead of 1 day, let us take 5 minutes is the period of time. Okay. This OHLC concept is useful in technical analysis. When you look at something called as charts, you will have candlesticks formed. We'll look at it later. Now, the period of time is 5 minutes. Let us say we are looking at the market at, let us say, 10:30. Okay, the 5 minutes duration between 10:30 to 10:35. Right? So whatever price is at 10:30, what is it called? Open price. Okay, let us say at 10:30 it was at 125. 10:31 it was at 122.5. 10:32 it was at 120. 10:33 it was at 127. 10:34 it is at 127 again, and 10:35 it is at 126. So what will be the opening price? What will be the high? What will be the low? Close. Open.
125.
Open. Next. High. High. 127. Low.
120.
Okay. Low will be 120. Close. That's the concept. Okay. Any given period of time, this will be the concept. Now, yesterday we looked at how the market used to work in the earlier times when we had jobbers doing the work of a broker or the middleman. So, what were they doing? One person was bidding, the other person was asking. So, we have two terms called bid and ask. What do you understand by the term bid? Let us say you are bidding for a product, some product. Let us say this water bottle. You are bidding 20 rupees. What does it mean? Are you offering to buy or offering to sell?
Offering to buy it at that much.
What do you think? Buy to sell? Offering to buy or sell? I am bidding for this water bottle at 20 rupees. Am I offering to buy it or am I offering to sell it? Buy it or sell it? Buy it or sell it? Bid or rupees? Buy. Kushi. You? Buy. So you are all right. Bidding is offering to buy. Okay. Bidding is offering to buy. Right? Now, ask. asking you 20 rupees. I want to sell this water bottle to you. I am asking you 20 rupees. So that is ask. I am offering to sell. So this will be a sell transaction price. Okay. Bid is buy. Ask is sell. Now bid will have price and I will show that later. We look at the concepts. Then we have a very important concept called stop loss. Short form SL. Anybody knows what this is? Anybody wants to tell something about stop loss? What do you understand? Literally, what do you understand?
Stop.
Okay, losses are being stopped. Okay, so losses are being stopped. Now, let us say someone named some share. No, I've been taking TCS only as the example. ITC. Okay, ITC from Jeevan. Okay. ITC. Okay, let us say ITC was at 900 rupees. Okay, we have some news, some hunch or some news or some intuition that it will go up to 975. Okay, so what do? Do we enter in a buy position or a sell position? Do we go long or short? Long or short? Short. We are expecting it to go from 900 to 975. Long or short? Long or short?
Short.
Who's going long? Who's going short? Who's going long? Okay, one. Okay, two, three. Three are going long. The others short? Anybody short? One, two. Anybody decisive? Okay, so we have to go long. Okay, long is nothing but buy. We are expecting. Oh, okay. I get it. Why you all took it a short? We are at this time. We are expecting it to go to this price in the future. So at this time, what do we do? Do we go long or short? Long. Okay. That was a problem. So at this point, we go long. That is, we buy. Okay. Now we had this expectation. Now let us say market gave us some surprise. We wanted to beat our ask. So the price goes down to 850. It may go down further to 700, may go down to any price. We are expecting whatever price. So let us see, it was a great fall. From 850 it is going to 700. Okay. So what happened is, if you had bought one share, your profit in this situation would have been 75 rupees. Right? You buy at 900, sell at 975, your profit is 75 rupees. Now if you had bought the share at 900, and instead of going to 975, dhokha diya, 700 at both. What happens? What is your profit or loss? How much? 200 rupees. Okay. So you are taking the trade for a profit of 75 rupees, but you end up making a loss of 200. Your idea was, let us make 75 rupees out of 900 rupees. Now you made a loss of 200 rupees. 75 will be there, 200 is there. It's almost 2.5 times. Okay. So this loss, to prevent this loss, you set a price somewhere between this zone as your stop loss. Okay. Basically, what is the purpose of the stop loss is, it is minimizing the losses that you are going to achieve when the market falls. Okay. Meaning, let us say it goes to 700, but the maximum loss that you can bear is, let us say, 75 rupees. Okay. So your stop loss price will be, anybody guess? 825. So your stop loss price is 825. Meaning, whatever happens, if the share price touches 825, I am going to sell. I can't take more losses. I don't know whether it may come back. It may come back from 825, it may go back to 975. I am not bothered. But what if it falls more? What if it falls more? Okay. So we are going to minimize our losses to 825. That is 75 rupees is our maximum loss capacity. So our stop loss will be 75 rupees minus the current market price. Okay. Now I will give you all an example of some. Anybody want to name some share? Any share? Sorry? Reliance. Okay. Reliance. Let us say you are buying 5 shares. How much capital do you have? Name someone. How much capital do you have? 5,000. Okay, let us say, okay, each share price is 1000, so capital is 5000. Okay, now we are expecting this 1000 rupees to go up to 1075, we can say. But market has some surprise, it is falling. We don't need to know how much it is falling. What is your maximum loss capacity on 5000? How much can you bear? How much loss can you bear? Name some. No, any amount. Whatever you think is right. 500. Okay, 10%. Maximum loss capacity is 500. Okay. So what will be your stop loss price? 500 on the total capital. Okay. So what will be your stop loss price for this share?
900.
Everybody understood the concept of stop loss? Okay. So you can place a stop loss order. I'll tell you about it later. So stop loss is this one. Okay. Now let us take one more example. Anybody want to name another share? HDFC. So this time we are going short, which means we are buying or selling? Selling. At let us say, what's your capital? Who said HDFC? What's your capital? Who said HDFC? What's your capital?
10,000.
Dream big, man. How much?
50.
50. Okay, 50,000 is the capital. Let us say the share price is at let us say 2,500. I want to give you easy maths, so 2,500. And what is your maximum loss capacity on 50,000? On 50,000?
5,000.
5,000. Same 10% as this maximum loss capacity. What will be your stop loss? Calculate. Sorry, 2475, option 1. Option 2, anybody wants to give something? 2250. 2250. Third option, anybody? Third option, anybody? Give third option. Kanisthidya? Third option. Yav correct ಇದೆ? 1 or 2? Wait. Anybody else want to give? Okay, 10 seconds more.
2000.
2000. Okay. Third option, 2000.
2,500.
2,500. Okay, fourth option. We are done with 4 options.
5,000.
Sorry? What will be your stop loss price? That's all I want. I don't want to know anything else. What is your stop loss price? You have 3 options. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, done. It is any of these 3 options or not? We'll see. Okay, now with a capital of 50,000, stock price is at 2,500. How many shares are they buying?
20.
20 shares. Okay, maximum loss capacity is 10% of 50,000. What is the maximum loss capacity? 5,000. Absolute terms 5,000. Okay, so 20 shares, 5,000. What at 2,500? If 5,000 is the maximum loss capacity in total, what will be the maximum loss capacity for one share? 250. Now, do we subtract it from the CMP or do we add it to the CMP? Subtract. What do we get when we subtract 2,000 to 500 to 250? 2250. And given we are right. The stop loss is 2,250, right? Okay. And what position do we take at the stop loss? Look at the board. What position do we take? Do we buy or sell? Buy or sell? How many sell? Look at the board properly. All sell. Anybody buy? Anybody buy? Anybody buy? Okay. See, our initial position was shorting. Okay. when you square off a position, a short position, what happens when you square off a short position? Do you buy or sell?
Buy.
Buy. So you need to buy at the stop loss. Understood? Understood? Okay? But the catch is you had to add 250 to 2500 because you are going short. You are going short, meaning your view is bearish. You expected the price to fall from 2500. You are going short, meaning you are expecting the price to fall from 2500 downwards. Okay. So when will you make losses when you are taking a short position? When what you are expecting doesn't happen. What are you expecting? Prices are falling. What happens when something happens that you didn't expect? You are expecting it to fall. When will you incur losses? When the price goes up. Okay. So your stop loss price was 250 added to 2500. Not subtract. Understood? Confused. Okay. Let me do it again. Let me do it again. Name a share, somebody. Name a share. Hey, Asian bro. IRFC. Okay, IRFC. IRFC is basically something to do with railways. Okay. So IRFC capital. Capital. Ah, 1 crore. This is how you dream big. 1 crore. Is that 1 crore? Yeah. 1 crore is the capital. Let us take, for easy calculation, let us take IRFC's LTP was, say, 50 rupees. Let us take it at 7,500. 7,500. Okay? Jivan, what is your view? Bearish, bullish? Bearish. Yeah. His view is bearish. So what position does he take? What position does he take if his view is bearish? Short. Good. So he takes a short position. Good. So when he takes a short position, but market doesn't give him this. Market goes up. Okay. Will he incur losses or profit?
Profit.
When the market goes up. See, basically when you are shorting at 7,500, it means you are selling at 7,500. So if you sell at a lower price and buy at a higher price, what happens? Loss. So if this happens, he will be at a loss. Okay. So stop loss should be on the downside, upside. Below 7,500, above 7,500. Above. Everybody above? Anybody below? Below. Confused. Still confused. Anybody below? Above. Anybody below? Okay. See, stop loss is basically put so that you can minimize your losses. When you are taking a short position at 7,500, it means you are selling at 7,500. Okay. Now let us say this share came down to 7,000. You are buying at 7,000. Okay. Now you are buying at 7,000, selling at 7,500. Do you make a profit or loss? Profit out of 500 rupees. Okay. So in the opposite case, let us say this has gone up to 7,750 and you are buying here, you are squaring off your position here because you had a sell position, you are squaring off with a buy. When you buy at 7,750 and sell the same product at 7,500, do you make a profit or a loss? Loss of 250 rupees. Okay. Now, we are taking a short position at 7,500. Loss will be when the price moves up or when the price moves down. Up or down? Moves up. Okay. When it moves up, you are bound to make losses. So you want to stop or minimize these losses. So what will be your stop loss? Your stop loss will be in this place. You capacity is 50 lakh. His maximum loss capacity is 50 lakh. He is a very rich person. His maximum loss capacity is 50 lakh. What will be his stop loss?
1000.
What will be his stop loss? Options, I need options. Sorry? 11,250 is the first option. 11,250 first option. A option. B, anybody? Some random number. Data. Just remember data. Data. 10,000. Okay. Second option we have 10,000. It's your money. Think properly.
For me, it was like 7,550.
Your maximum loss capacity is 50 lakhs.
They were set at 0.1%.
3750
Per share.
per share. Yeah, we are talking per share. 3750. One more option, anybody? Anybody wants to give?
That is the addition to the shares. That has to be added to the initial.
Let her think. 11,250 is option A, so you don't want option C? No. Anybody? Any more options? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, right? Okay, we have two options. How many go with A? 1, 2, 3, 4, 5. Okay. 5 with A. How many with B? 1 with B.
Because I told you.
Okay. So this is the correct answer. 11,000. Everybody understood? Anybody has a no? Anybody has a no? What? Okay. So we're clear with stop loss concept. Stop loss is the most important part of a trade. See, there is a difference between an investment and a trade. Okay. We look at it in the next slide. Immediate next slide, we look at what is an investment and what is a trade. Okay. But before that, in a trade, your most important is your stop loss. Okay. The reason is, let us say you had bought HDFC at 5,000. कितना भी ऊपर जाना चाहिए, ಎಷ್ಟು ಬೇಕಾದ್ರೂ ಮೇಲೆ ಹೋಗಿ. Okay. You are not incurring any losses if you take a buy position. If it goes up, you are not going to make any losses. So how much of a profit let it come? It doesn't matter. So your target may not be fixed. But your stop loss should be fixed. It should be the maximum loss capacity that you can handle. Okay. Let us say in 5,000, you invest 50,000. Your maximum loss capacity, let us say, is 5,000 only. Your stop loss should be fixed at this point. Whatever point you calculate, that should be fixed. You need to have discipline in this. If you don't have discipline, if you think, okay, it might touch that point and come back. If you think like that, it may happen, may not happen. There is a 50-50 probability. And if this doesn't happen, it's going to go down. And your maximum loss may go up to this, may go up to this, may go up to this. So on 50,000, if you make a loss of 25,000 is your mini capital. 50% your capital is gone. So you are making losses, that matters a lot. How much of a profit you make, you don't make profit, that's not a problem at all. Even if it goes up and comes back to 5,000 and you hadn't sold here, you sell it here, it doesn't matter. 0 rupees profit, but my capital is anyway safe. Whatever I invested is safe. But stop loss has to be fixed. You need to maintain discipline. Okay. So we have two more concepts. One is the concept of volume. Okay. What do you understand by volume? Anybody wants to say something about volume? Space occupied by mass. Anybody else want to say something about volume? What is the volume? bottle? This is not 500. This is what? 250 ml, I guess. This is 500 ml. 500 ml. 500 ml. So the volume of this is 500 ml. What does it mean? What does it mean when I say this bottle volume is 500 ml? Yeah, it has a capacity to hold 500 ml of water or any other liquid. Okay. The same thing is volume. Okay. Volume means the number of shares that is being traded. Just like 500 ml of water is there in this, let us say the volume is expressed in numbers. Okay, it is not any quantity. It is expressed in numbers. Let us say 25 lakhs. If volume of some share, let us say HSBC, is 25 lakh, it means 25 lakh shares are traded on that day. You understood? So 25 lakh shares are being exchanged between buyers and sellers in the market. This is the volume. It means 25 lakh shares are being either bought or sold. It doesn't mean there are 25 lakh buyers or 25 lakh sellers. It means buyer plus seller together is 25 lakh. Okay, so you don't get confused between. Let us say the number of people who have bought a share is 11 lakh, and the number of people who have sold the same share is 14 lakh. The volume will be 25 lakh. Okay. You might think if 11 lakh people are buying, 11 lakh people are selling it to them. That is how they can buy. If someone sells, only someone can buy. So if 11 lakh people are buying, there are 11 lakh sellers, and if 14 lakh people are selling, there are 14 lakh buyers. Okay. But this 11 lakh buyers and the 11 lakh sellers, they are exchanging only one product. Now, for example, if I sell this water bottle to you, I sell this water bottle to him. Okay. So I am a seller, he is a buyer. But the product being exchanged is, there are two entities exchanging only one product. Okay. But instead of that, I sold these two together to him. Okay, I am a seller, he is a buyer. What is the volume now? 2. Okay. And I've bought 5 chalk pieces from him, or maybe we'll split it. Whatever. He has 2 chalk pieces. He has 3 chalk pieces. I am ready to buy 5 chalk pieces.
But I'm not ready to sell.
He is ready to sell. I've bought 3 entities. I've bought 3 chalk pieces from him, 2 chalk pieces from him. What is the volume? 5. No matter how many entities are there, the volume is the number of shares being changed hands. Okay, 5. Understood the concept of volume? Now this volume is applicable to the whole market. It is not just 1%. Okay, it is to the whole market. Thank you. So the volume was the number of shares being traded in the entire market. Okay. Now there is this sub-concept of volume. It is called lot size. Okay. Lot size means the bundle, a bundle of shares that can be traded, minimum bundle of shares that can be traded. Let us say the lot size of any share, it means to name share. Sorry? Apple. Okay. The lot size of Apple, by the way, Apple isn't listed in India, it is listed in US. So the lot size of Apple is, let us say, it is 15. It means when you are buying or selling Apple shares, you need to do it minimum of 15 shares. You can't go below that. Or in multiples of 15. You can't buy or sell 20 shares. Same way you can't buy or sell 3 shares. You can't buy or sell 301 shares. It has to be either 50 or in multiples of 50. This is the concept of lot size. Okay, in India, the lot size of shares in general, all shares in general is 1. Okay, you can't buy a part of a stock in India. You have to buy it in 1 or multiples of 1. So you can buy 2, 3, but you can't buy 2.75 shares or 5.36 shares. You can't buy. You can't do this in India. You can do it in US. US allows part shares. Okay. So in Indian markets you can't buy it. The lot size is 1 when it comes to shares. But when it comes to other futures and options, the lot size is set by the exchange, either NSE or BSE will set the lot size for any futures and options. We'll look at what are futures and options later, but just remember that for futures and options, NSE and BSE can set the lot size. It will usually be either 20, 25, 50. The shares are very less valued, like 3 rupees per share, that can be at 3,000 could be the lot size. So you have to buy in terms of 3,000 or multiples of it. Okay, this is.
Is the lot size and volume specific to each company, or is it like
See,
same?
volume is what happens in the market. Nobody controls what happens in the market. So today maybe HDFC, there may be 10 lakh shares being changed hands. Tomorrow nobody will not trade HDFC. Okay, so nobody might trade HDFC. In that case, its volume may be 0, but usually it isn't 0. Let us say 3 lakhs could be the volume. Okay, that is not determined by any single body. It is determined by the number of trades happening in the market in particular share. Lot size is fixed for all shares. It is 1. Okay, for shares it doesn't change. Only for futures and options it changes. Okay, when you come to this concept, you will have to remember what is a lot size. That is why I have told you what is the lot size in this case. Now we have done with all the vocabulary. We'll recap it tomorrow. We don't have much time today left. So we'll go to the next concept. We have something called market capitalization. Market cap is the short form. What it essentially means is, Jeevan had a capital of 1 crore. That is called a capital or an investment amount or a corpus. Okay. So that word capital is applicable to a particular share in the market. Okay. His capital was 1 crore. Anybody who is not taking a trade yet, Kushi, what's your capital? Let us say you want to invest in IRCTC. What is your capital? Any amount? 1 lakh. Okay. So her capital is 1 lakh. Okay. So her capital might change from people to people. Exact same way, capital changes from stock to stock. And what is this market cap? It is nothing but number of shares in the market multiplied by the LTV. Okay, it means, let us say, for any share, name any share please. Dettol is a brand name, it's not a company name. Hindustan Unilever, HUL. Okay, Hindustan Unilever, it's a very good stock. Let us say HUL has a total of 25 crore shares in the market. Okay, and each of the share is traded at, let us say, 7.5 rupees. 7.5 rupees. Okay, we'll make it simple. Let us say it is being traded at 10 rupees. What will be the market cap? 250 crores. Okay. It means 250 crore worth of shares are being circulated in the market. This number of shares is not the volume. It is the total number of shares of that company available for the public to trade. Okay. It is multiplied by the LTP. LTP is changing, so market cap can also be changing. Got it? So 250 crore worth of shares are being traded in the market in total. It is not the volume. Remember, it is not the volume. It is the total number of shares being available for trading. Okay. So what does this signify? It signifies how big the company is. Okay. It signifies how big the company is. So you would have heard of the terms large cap, mid cap, and small cap, and even micro cap. Anybody has heard of it? Heard of it? No. Okay. Yeah, statement. See, 20,000 crore is the minimum limit for a company to be called as a large cap company. So any company that has a market cap of more than 20,000 crores is a large cap company. Okay. Same way, a mid cap company is anything that falls between 20,000 and 5,000 crores. And a small cap company is anything less than 5,000 crores, which has a market cap of anything less than 5,000 crores. For example, let us take the example of Yes Bank. Let us say it had a number of shares, the total number of shares being available in the market is 50 CR. Okay, I can go here. It is 500 CR. And it was its LTP before a fall was, let us say, 200 rupees. So is it a large cap or mid cap? Sorry?
500 CR is
Number of shares.
No.
Number of shares. LTP is 200. Is it a large cap or mid cap? Or what is its market cap?
It is large cap. 1 lakh crores.
That is 1 lakh crores. Is it a large cap or mid cap?
Large cap.
Large cap. So Yes Bank fell from 200 to 4 rupees per share. It actually fell even below, but it fell to 4 rupees. Okay. So after falling to 4 rupees, which is the LTP,
Small cap.
new LTP, what will be the market cap?
Small cap. 2,000.
2,000 crores. It became a small cap market. Okay. This doesn't happen on a day-to-day basis. This happens once in a while. Our target is not this. Our target is to identify large cap, small cap, and mid cap companies. Large cap companies have a huge market cap. Okay. Which means there's a lot of money involved in it. If there is a lot of money involved in it, there are a lot of people involved in it. Okay. Not everybody can afford 20,000 crores. Okay. Let us say there are 3 crore shareholders in India. 3 crore shareholders. You want 3 crore? Let us say we have 15 lakh shareholders. Demat account holders in India. Okay. And a large cap company with 25,000 crore market cap is there. If it is split equally between 50 lakh people, how much will each people have? How much money is each people having? How much money worth shares are each people having? So that will be 50 into 10 power 5. This will be 10 power 7. 2.5 lakhs worth shares each demat holders have, right? 2.5 lakhs per person is not a big thing. Okay. Now imagine there were only 2 lakh people. Just a hypothetical situation. No company will stay at 250 crores. You have more. So if there were only 2 lakh demat holders and the same market cap is divided by 2 lakh, what happens? One and a quarter lakh. Okay. So it's 12 lakh from 50,000. 12 lakh 50,000. 12 lakh 50,000 not everybody can handle it. You understand the difference? When the market cap is more, there is more people required to manage the total amount being circulated in the market. Okay, each share has a value. So when I say there is 25,000 crore worth of shares being circulated in the market, it means 25,000 crore money is being circulated in the market. So 25,000 crore money in the hands of few people is a large amount. So it needs large people. There will be many people involved in the trade of the large cap companies, which means the risk of one person manipulating the price of the share will be less. You understand? When volume increases, volatility, we discussed about volatility yesterday, decreases. The extreme fluctuations of the share doesn't take place when large people are involved, which happens in a large cap company. So investing in a large cap company for a long term is not at all risky. You don't have to have the risk of a sharp fall. Small fluctuations may happen. That happens with every share. But the volatility is less with large cap companies and more with small cap companies. Okay. A small tip here. When you go for a mutual fund, okay, mutual fund is nothing but people, there are institutions that collect your amount and invest it in the share market on your behalf. That is mutual funds. Okay, mutual funds have many investment options. You can select whichever investment option you want. So most mutual funds that have high risk will invest in small cap because volatility is more, and if they are entered at a low price, they could make huge profits because volatility is more. Even 20 rupees can go up to 250 rupees, which is almost 11x the returns, 12x the returns. Okay, so small caps have high risk but high profit. Yesterday even Harshit Mehta said, risk कितना ज़्यादा है, उतना ही तीखा होता है मार्केट का मसाला. The meaning is more risk, more profits can be made. Okay. Mid cap is medium risk, medium profit. Large caps, low risk and lower profits. This is one tip that you can take home for mutual funds. We will not be discussing mutual funds in detail now. Maybe I might take a course on mutual funds. We might, not mutual funds in detail, personal finance in detail we will be doing. In that one class will be on mutual funds, you can attend that if you want. Now, we have two more terms called margin. Anybody wants to go early? 5:30, maybe we can extend it up to 5:40 or 5:45, no problem. Okay. Margin. Now, when it comes to margin, it is a relatively newer concept. It wasn't there earlier. Okay. It was there in 1980s. Before that, it was not there. Now, what is margin is? See, earlier, for the capital that you people had, you had given me examples of 10,000 and 50,000. Okay. Does anybody know how much an MRF share costs? This is the costliest share in India.
1,05,000.
It's 1,25,000. 1,25,000 is the share price. With this capital, do you think you can buy at least one share of MRF? No. Nobody can buy. But to relieve this issue, brokers and exchanges together have brought in this concept of margin, which means with only a part of the actual amount required for buying one share of MRF, you will need 1,25,000. To buy this much worth, that is 125,000 worth of share, you need to have only a part of it. That part of it depends on the share. Usually, that will be somewhere between 10 to 25%, or sometimes it may go up to 50% also, depending on what is the product that you are looking at. 10 to 25% is the margin. Meaning, even if you have 12.5k with a broker who gives you a margin of 10%, if the broker is giving a margin of 10%, if you have 12,500, you can buy one share of MRF worth 125,000. This is the concept of margin. Okay, the broker is providing a margin of 10%. Meaning if you pay 10% of the action amount, that is enough to buy the share. Provided you sell the share of MRF for shares, margin is not allowed in India. And not allowed meaning not practiced in India. It is being practiced for futures and options. Okay. Because futures and options will be in lakhs. Each lot will cost you lakhs. Okay. So there we need margin. In shares, margin is not practiced in India. No share will give you margin except for intraday trades. Meaning you buy MRF in the morning with 12,500. You are ready to sell it in the evening. The broker will allow you a margin of only 10%. Okay. For this, the type of order that you select will be an intraday order. While placing an order, you are promising the broker that I will square off the position within today's market closure. That is called an intraday order. We look at the types of order later. But an intraday order is this. You promise the broker that you will close the position today. If I forget to close it, you automatically close it at 3:30. Close it meaning square off. If you have taken a buy, you sell it off at 3:30. If I have taken a sell position, you buy it off at 3:30. This is the meaning of an intraday order. Only on intraday orders, you have the concept of margin. The reason is security. In case someone buys MRF share with only 12,500 and they either run away from the country, they are missing, they are dead, whatever happens, the person who had sold should get 1,25,000 because he sold it for 1,25,000. He needs to get 1,25,000. How much have you paid? Only 12,500. What about the remaining 90% of the money? Someone has to settle it to them now. So this risk is less in intraday. The risk of you or any shareholder for that matter defaulting someone else or running away or not being able to pay up the remaining capital is less in an intraday trade. Nobody is going to run off in one day. Nobody is going to die in the same day. That is what is the higher probability. There may be people who die in one day. There may be people who run away in one day. But the probability is more than not much happens in a single day. So intraday brokers allow margin. Understood? Now the last concept for today, actually I thought of finishing types of investors and orders today, but it's okay. We will do a quick recap. The revision section was a little long. Now coming to circuit filters. Okay. We spoke about something called volatility. Okay. So this volatility, how dangerous it is. Let us say there is some company being traded at 270 rupees. There is chances of it falling to 27 rupees. 27 rupees. with such high volatility in a single day. Okay. Now the circuit filter concept is brought in by SEBI. It is a market-wide concept. Okay. Every share has a circuit filter, but the amount of circuit filter differs. We look at it in a while. Circuit filter, what it says is, we, that is the market, is not allowing the share to go through so much volatility. I want to reduce the volatility so that I don't want my investors to lose a lot in a single day. I don't want somebody who is buying at 270. If the prices goes down to 27, he is having a 90% loss. I don't want my traders to have such a big loss. Okay, that is the concept of SEBI. It doesn't want anybody to want to much loss in a single day. Small loss happens in the market that you have to cover. That is your intelligence. But I don't want somebody to lose 90% in the market in a single day. Okay, so what happens is, the SEBI allows for only a little of a volatility from the opening time. From the opening price, whatever price, let us say it was at 125 rupees. From the opening price, it allows a certain upper limit and a certain lower limit. Beyond that, the prices are not supposed to go. So this prices will not be allowed. And this circuit filter is valid for only that day. Okay, because the next day's opening price will be different. The next day it might open at 200 rupees. On that day, the circuit filter will be something about 200 and something about 200. That depends, changes day by day. But if you look at the percentage, it will be fixed as 5, 10 or 15%. 5, 10, 20% is the circuit filters for different shares. That is determined by SEBI. They want to allow 5%, they want to allow 10%, they will allow. It will be fixed until they change it. They can't change it every day. They can't say, okay, HDFC today 5% will fix, tomorrow we'll fix 10%, day after tomorrow we'll fix 20%. They can't do that. They can change it only after certain while. So they will announce it before changing. Okay. So this is the concept of circuit filters. This upper limit is called the upper circuit. Lower limit is called the lower circuit. Upper circuit, lower circuit. The price is not supposed to go beyond the upper circuit or lower circuit. And it depends on the opening price of the day. Okay. Now there is this concept called as market-wide circuit filter. We saw a concept called Nifty. Okay. So Nifty was a representative figure of the whole market. Whole market, Nifty is a representative figure. What it means is, Nifty value, if it goes up, it means the general trend of the market is upwards. If the value goes down, the general trend of the market is downwards. Majority of the stocks is falling. Okay. This Nifty is based on the sum of market caps of all listed shares. Sum of market cap of